Simon says subscribe and click on the bell icon to receive notifications.
Hello and welcome to Module 401, where we will be discussing how to forecast revenues in our Financial Forecasting in Excel course. Before you can build a comprehensive financial forecast, you need to build an accurate business model. One way to do that is by modeling revenue. Let's move to our Excel file and discuss our revenue forecasting approach for ABC. This is the Revenue Projections tab in our Excel file, and we will be discussing some core concepts in this tab. Firstly, let me reiterate that the figures are in million USD unless otherwise stated. Before we start, let me just say that the revenue projections vary widely based on the industry and the business model. For example, to project revenues, a manufacturer might consider capacity utilization rates, while a law firm might look at client lists or sales per customer. So understanding the type of business and the business model of a company is very important. Sales, as we have discussed previously, is the top line on the income statement. Forecasting sales in the future years is an activity often performed inaccurately, with growth rates either being anchored around a target of inflation plus X or an unrealistic round number plucked from thin air. In its simplest terms, sales forecasting, or projecting net sales for the future years, is the process of estimating future sales. At first, this may sound like both a vague and daunting task, but with some application, it can be achieved relatively painlessly. There shouldn't be any guesswork in forecasting sales. It is, in fact, a process of understanding the underlying assumptions and drivers of sales and eventually tracking and managing them. Let me also set realistic expectations at the outset. The probability of finding exact future sales is almost zero, but the accuracy of sales forecasting is critical for projecting our financial statements. In our Revenue Projections tab, let's first discuss the main forecasting approaches. There is the top-down approach, and we also have the bottom-up approach. In the top-down approach, we start with the big picture and work downwards. We define the milestones that need to be achieved in order to reach the target. For instance, if car sales are around $1.5 trillion, what should the total sales forecast of ABC be if it wants to penetrate 15% of the market? The total sales would be 1.5 times 15% times 1 million, because the figures are in a million USD. The total sales should then be 225,000. As you can see, right now ABC is at 122,000, and it has a long way to go in order to reach its target. But let's say the management has this long time horizon in mind, and their goal ultimately is to capture 15% of the market. As it's a long-term target, let's say ABC wants to get there 10 years from now. If we go in the ABC Sales Breakdown tab, we see that the total worldwide sales are at 10.22%. This is the market share of ABC as of December 2020. In order to be more realistic, the management can say that we want to achieve 10.5% of the market in 2021. In this case, the total sales are then $157,500. This is slightly more realistic, especially if we consider that the net sales in 2016 were at $149,000. The second forecasting approach is the bottom-up approach. In the bottom-up approach, we look at the micro assumptions based on the resources the company holds. This method allows businesses to look at the efficiency of their current operation and isolate means in which they can tweak factors to increase sales. The more data that the business has from prior performance, the more accurate its forecasts can be in this area. So let's apply the bottom-up forecasting approach to ABC. In this approach, there are primarily 3 steps. In the first step, we will calculate the sales volume. In the second step, we will look at the product and service prices. And in the third step, we will calculate the revenue, which is the sales times the average price. For ABC, if you recall, under the income statement, ABC had provided some more information into its products. The products were primarily broken down into 2 categories: automobiles and parts, and then trucks. For automobiles and parts, ABC further provided a breakdown by geographic location, and for trucks, it just provided one number without breaking it down. So we can assume for trucks, this is the global truck sales. And for the automobiles and parts segment, we will break down the sales into each geographic location. The other point to note over here is that total automobiles and parts sales is approximately 95% of the total net sales. For example, in December 2020, total sales for automobiles and parts was $116,361, which is 95% of the total net sales of $122,485. Let's use the figures in 2020 as a basis to project the revenue for 2021. We also need to take a look at the total sales volume to be able to forecast the sales volume for the next year. So if we go in the sales breakdown tab, the total sales volume as of December 2020 was 8,028 units. So let's use this figure as a basis. For North America, as we can see, the growth rate has been falling since 2018. We see a similar trend in Latin America and Europe. However, Asia has been strong and Africa has remained somewhat flat over the past 3 years. Having these figures in mind, we have a discussion with the Vice President of Sales for ABC, and the Vice President of Sales mentions to us that the sales in December 2020 were quite low due to COVID, so it would not be advisable to consider that decrease in sales going forward. The Vice President of Sales provides us with these growth rates that he estimates for 2021. VP also expects that the sales per geographic location is going to be in the same proportion as 2020. So let's look at the sales per geographic location as well. For North America, we simply divide the sales in 2020 by the total net sales for 2020 to arrive at 39% of net sales. For Latin America, it's the same approach. We divide the sales in Latin America by the total net sales and we arrive at 25%. We apply the same approach to the other segments as well, sales volumes rates. So we have added these percentage amounts over here. Now let's calculate the sales volume for 2021 based on the proportion of sales per segment and the growth rate that has been provided by the Vice President of Sales. For North America, it's going to be 39% of 8,028, the sales volume in 2020, times the 3% growth rate. So we arrive at 3,224.85 for North America. For Latin America, it's going to be 25% of the sales volume in 2020 times the 2% growth rate. Europe is 16% of sales. And we times the 5% growth rate. Asia is 11% of sales with a 4% growth rate. Africa is 4% of sales with a 3% growth rate. And finally, the global trucks are 5% sales with a 2% growth rate. Now we have the forecasted sales volume for 2021. Let's add it all up. So the total sales volume is forecasted to be 8,279.28 units. In the second step, we need to calculate the average price per product. Now we spoke to the vice president of pricing at ABC, and we were informed that the average price per product should be in line with what we had in 2020. So how do we calculate the average price per product in 2020? We need to see what the net sales were in 2020 and divide it by the sales volume in 2020. So we know that the net sales are $122,485, which you can also get from the income statement over here. And we divide this figure by the sales volume of 8,028 to arrive at $15.26 as the average price per product. Now let's calculate the revenue, which is simply sales times average price. So the revenue for 2021 is $126,318.78 million USD. The question now is, which approach is more appropriate? The top-down approach may result in subjective, overly optimistic predictions, but it is useful for swiftly establishing clear milestones that can become organization-wide benchmarks. In this example, we said that ABC aims to capture 10.5% of the market in 2021. So the total sales should be $157,500 1 year from now. So it was a relatively quick process using a top-down approach. In the bottom-up approach, however, this was a slightly more granular calculation where we had a look at the sales volume in 2020. Then we calculated the proportion of sales per segment and the growth rates to arrive at the total sales volume. We then calculated the average price per product to arrive at the revenue for next year. For sales forecasting purposes, the bottom-up approach can give a more structured, realistic perspective. And that's why we will be using the bottom-up approach to forecast sales for ABC. That wraps the current module. In this module, we discuss the top-down and the bottom-up approaches to revenue forecasting. Join me in the next module as we discuss the types of revenue projections. Hope to see you in the next module. Goodbye. Hello and welcome to Module 402, where we will continue our discussion of forecasting revenues in the Financial Forecasting in Excel course. There are as many ways to create a revenue projection as there are businesses. Let's move on to our Excel file and discuss some of the most common ways in which a revenue is projected. This is our Revenue Projection tab, and we will be discussing some revenue projection approaches. Before discussing the revenue projections approaches, let me state that in every approach, I will be making some assumptions so that I can explain to you how to apply the different revenue projection types. The first approach is called the sales growth approach. The sales growth assumption in each period defines the change from the previous period. In our example, the assumption is that the global sales will grow at 5% next year. So in order to calculate our total sales for next year, we use the net sales figure of $122,485 and multiply it with the 5% growth rate to arrive at the total sales figure of $128,609.25. This is a simple and commonly used method. The next type of approach is called the inflationary volume effects approach. In this approach, instead of a simple growth assumption, a price inflation factor and a volume factor is used. So we are assuming that the automobiles and parts grow at 3% and trucks grow at 5%. We already discussed in the previous module that the percentage of sales from automobiles is 95% and the percentage of sales from trucks is 5%. So the dollar sales from automobiles is simply 95% of the total sales figure times 3% growth rate, and then the dollar sales from trucks follows the similar approach where we multiply the total sales times the percentage of sales coming from trucks, and we then multiply it by the 5% growth rate. In order to calculate the total sales for next year, we just add the two components together to arrive at $126,282.04. The next approach is called the unit volume approach. This method is appropriate for businesses that have a simple product mix. It permits analysis of impacts of several key variables. For instance, if we assume that the average price increases 2% and the total number of units sold are 20,000 next year, we can calculate the total sales. Firstly, let's calculate the average price in the current year. This is simply the net sales for 2020 divided by the total number of units sold, which in this case is 20,000. So the net sales is $122,485. We divide that figure by 20,000 to arrive at the average price in the current year of $6.12. The new average price, as per our assumption, increases by 2%. So the new average price is simply the old average price times the 2% growth rate. We arrive at the new average price of $6.25. For the total sales, we simply multiply the new average price times the total number of units sold, which in this case is 20,000. And we arrive at the total sales figure of $124,934.7. Then we have the dollar market size approach. This approach is useful for cases when there is information available on market dynamics and where these assumptions are likely to be fundamental to a decision. So our assumption is that ABC's market share decreases to 8%. First, we need to know what the current market share is. From the ABC sales breakdown tab, we know that the current market share is 10.22%. And the current sales are $122,485. So in order to calculate the total sales figure, we divide the current sales by the current market share and multiply it with the new market share, which is 8% in this case. As the market share decreases, so do the current sales for next year. And the forecast for next year becomes $95,878. Then we have the unit market size and growth approach. This is more detailed than the preceding case and is useful when pricing in the market is a crucial variable. This will be useful for a company with a price discounted strategy, for example, or a best of breed premium priced niche player, such as the luxury car market. Let's apply this approach to ABC. Our assumption is that of the sales, 10% is coming from the luxury segment, which will increase to 11% next year. However, the total sales will decrease by 2% next year. So let's calculate the current sales for the luxury segment. This is simply the net sales for the current year times 10%, which is coming from the luxury segment. Our current sales are $12,248.5 coming from the luxury segment. And the luxury sales for next year is going to be higher by 1% because it's going to increase to 11% next year. But we also need to keep in mind that the total sales will decrease by 2%. So effectively, what we do over here is that we first calculate the total sales in this part of the formula. So it's 98% times the net sales for the current year, and then we multiply that figure by 11%, which is the portion of the sales coming from the luxury segment. The luxury sales figure for the next year is $13,203. We already determined that the total sales will decrease by 2% next year. So this figure is simply 98% of the current sales. This approach is useful to determine the sales per segment. So even though the luxury sales have increased from 10% to 11% next year, the total sales have gone down. We can also use a volume capacity approach. This approach is important for businesses where production capacity is essential to the decision. Let's apply this approach to ABC. The assumption is that the capacity utilization rate decreases by 5%, and every 1% decrease in utilization leads to a 0.5% decrease in revenue. So effectively what this means is that the 5% decrease in capacity utilization will lead to a 2.5% decrease in revenue next year, which means that the total sales next year will be 97.5% of the current year's sales. Our total sales using this approach is $119,422. We can also derive the revenue based on investment. Investment can be in R&D or research and development or market related. Let's see how we can apply this approach to forecasting our sales for ABC. If we assume that the R&D spend increases by 10% and it's currently at 10 million USD, it will result in an increase in revenue of 1%. So the current sales is $122,485 and the current R&D spend is 10 million USD. We know that the R&D spend next year is 11 million, which is 10% higher than the current R&D spend. So the total sales in this case would be the current sales times an increase in revenue due to additional R&D spend of 1%. Our total sales forecast for next year is $123,709.85. Another approach is called the revenue based on installed base. Examples where this approach is more relevant include classic razor blade businesses and businesses like computers, where sale of service, software, and upgrades are essential. If we assume that the parts are 3% of the current revenues of ABC and grow at 10% from next year, and the overall sales decrease by 4% next year, what will the total sales be? So firstly, let's look at the current sales coming from parts, which is simply the current sales times the 3% that is now coming from parts. And then the expected sales next year from parts will grow by 10%. So we multiply the current sales coming from parts times 10% to arrive at the sales next year. The total sales decrease by 4% next year. So the total sales is 96% of the current year sales. So over here we are modeling the current base, which in this case is the sales of parts. So even though the sales of parts has increased by 3% to 3.4%, the total sales have decreased by 4% next year. Using this approach, we can really break down the sales coming from different components. Then we have the employee-based revenue projection approach. It's not applicable for ABC because it's primarily used for service firms such as auditors, professional services organizations, or law firms. Modeling is usually based on net staffing or revenue per employee. There can also be more detailed models, such as models that include seniority of employees and other factors affecting prices. We also have square footage based models, but these models are primarily used by retail companies as they estimate the revenue per square foot or the revenue per store. And lastly, we have the occupancy-based approach. This approach, although not applicable to ABC, is very useful particularly for airlines, cinemas, hotels, and other businesses with low marginal costs. Now that we have gone through these various revenue projection approaches, what do you think is the most suitable for ABC? The most suitable approach for ABC is the sales growth approach. The sales growth approach is relevant in this case for two reasons. Firstly, because ABC is an established company with well-developed sales channels. And secondly, we have historical data available which can be used to forecast more accurately. Remember that each business is different and you need to understand the business and see what information you have available to determine the most appropriate revenue projection type. In the previous module, you may recall that we identified the bottom-up approach as the preferred approach for forecasting sales, and we have now determined that the sales growth approach is the most appropriate type of revenue projection that we can use to project revenues for ABC. In the previous module, we also calculated the revenue for 2021 based on the growth rates and the sales proportions by geographic location. Let's see how the revenue projection from 2021 through 2025 looks like. We are projecting the revenues in the income statement tab under the income statement. You may remember these growth rates for 2021, and the total net sales for 2021 are $126,319 based on the growth rates that we received from the Vice President of Sales. From 2022 through 2025, we have received the growth rates from the Vice President of Sales of ABC, and we applied those growth rates to identify the net sales figures per segment from 2022 through 2025. Remember that the approach is the same. For instance, if you look at the 2022 sales for Europe, the growth rate is 4%. So the net sales for 2022 is simply the sales from 2021 times the 4% growth rate to arrive at the net sales figure for 2022. Based on these growth rates, these are the net sales figure amounts from 2021 through 2025. That concludes the current module. In this module, we discussed the various types of revenue projections. Using assumptions, I also showed you how to apply the various revenue projections. Remember, you need to understand the business and see what information you have available to determine the most appropriate type of revenue projection. Using a bottom-up approach and the sales growth revenue projection, we projected the revenues for ABC from 2021 through 2025. Hope to see you in the next module. Goodbye.
This video is part of our full course on financial forecasting and modeling. To take a look at the course, click over there. If you're not a subscriber, click down below to subscribe so you get notified about similar videos we upload. And to see similar videos, click over there.